There's one client that set up these policies, set up this banking system of ours. He wanted to buy the building from which his business was operating. So he used his own system to buy the building, which had 3 other tenants in, plus his own business. So there's 4 tenants in there. So that's another way of diversifying.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with MC Laubscher. MC is a husband, father, business owner, investor, podcaster, and best-selling author. As one of the leading voices in alternative wealth strategies and alternative asset investing, MC's passion is helping business owners achieve more financial freedom. MC, as I said, I don't love to read through the whole bio. There's a ton of interesting stuff and accomplishments. I'm sure we're going to talk about a lot of them, but I just want to start by saying thank you. Thanks for being here today. Thanks for coming to share your story. Your particular area of expertise is very, very interesting to me. So I will have lots of questions, but yeah, thanks for being here. I'm excited to talk today.
Thanks for having me. I've been looking forward to our conversation.
Awesome. Well, let's start just by hearing your background, your story, kind of what got you to where you are today, and then we'll dive in from there.
Yeah, I'm originally from South Africa, so I've lived in the U.S. for 25 years now. Time flies when you're having fun, right? I grew up in a very interesting time in South Africa's history. I was a young man when I still remember Nelson Mandela was released from prison. We changed from the apartheid regime to a different form of government. We had elections. It was a very interesting time as a young man. Actually, a gift to grow up during that time. A lot of uncertainty, a lot of unknowns. I got to witness the madness of crowds firsthand. I didn't have to write a book or read a book about it. Rather, I just observed it. It was very interesting to see how people behave when there is uncertainty. There's a ton of fear, and people don't know what's going to happen tomorrow. Yeah. Which was a gift again in just of what I'm up to today in the world of finance, in the world of alternative wealth strategies, serving business owners, investors, and so forth. But when I left South Africa, I traveled a bit. I ended up in the U.S. Backpack, suitcase, a couple $100, sense of humor, sense of adventure, ready to give it a rip. Saw the opportunities that was in the United States was just an abundance, still is today. I played in a sports league up until 2007, like a national rugby league. And, as I was pursuing a career in sports, I read pretty widely. I've always been interested in history, economics, business, investing. I came across Rich Dad, Poor Dad by Robert Kiyosaki on one of my trips. I was that guy on the team bus or team plane reading. I took action and bought my first investment property probably, 6 months later in 2001. And I had some tenants that moved in there. I collected the rent, paid all the bills, and there's cash flow. And that's kind of where my journey as an investor started. Now, if you're listening to this and you've bought real estate or owned real estate or have been a real estate investor, you're probably chuckling because you know all the other things that follow. Tenants, believe it or not, sometimes don't pay rent. Some, believe it or not, sometimes they even damage your property. So school really actually starts. That really set me on a journey where I kept learning, I kept studying, I kept reading. The paradigm shift that happened during Rich Dad Poor Dad was just incredible. I saw the world differently. I saw the world of money, business, investing differently. I set off on this journey to start businesses and invest, and failed again and failed again and again and again, and eventually I had some success. And as I was pursuing this, my career in sports, I was trying to build something on the side to eventually retire too, couple of things really shaped the next chapter of my journey, where I met some interesting people, got an insight into family offices, learned how to create cash flow management structure, create my own bank to fund my investments, to fund my business ventures. In 2015, I started a company called Producers Wealth, just teaching everything to clients what I've learned up until that point, 15 years in real estate investing, cash flow management systems, and so forth. And we started it completely virtually into 2015. So we used Skype back then, and it was quite an education process. These days, you just jump on a Zoom call, and everybody is familiar with it, right? We had to have people download Skype and set up accounts and so forth. But in 2015, I started Producers Wealth. It's our 10th year in business. In 2016, I started a podcast called Cash Flow Ninja, just sharing what all of our clients were busy doing, because they were incredible business owners and investors. And I was just fascinated just how many different ways you can generate income and build wealth. And still doing that today. That show put us kind of on the map, because something that I never expected. It was just kind of a hobby, but we were, downloaded millions of times in 180 countries, and started kind of like a business. It became a business of itself, of just financial education. And we've got books and podcasts and webinars and all kinds of stuff there. But today, that's what I'm up to. Just again, with Producers Wealth, serving business owners all across the United States, and just continue to share the journey, and interviewing the best minds of business and investing on Cashflow Ninja.
Oh, that's awesome. A lot in that journey. I think a couple of things I want to point out. One is just, you mentioned your step into real estate in 2001, and how there are things that maybe we don't think about, that people damage the properties, and people sometimes don't pay their rent. And so it's I think and this is, I invest in real estate. It's not to discourage real estate investors, but I do think having your eyes open to like the realities of it is pretty important. The other piece that you mentioned that I think a lot of people don't maybe think about either is just the failures, which is it's a part of business. I think it's a part of business. You're going to make mistakes. You're going to have things go bad, but ultimately, like, each one of those are really learning episodes, the ability to kind of regroup and start with fresh knowledge, and something that didn't work. Okay, this didn't work. Why didn't it work? What do I shift, pivot? So I think when sometimes when people get successful, they either don't talk about those things, or maybe they've just forgotten about them. Well, I don't know what the case is, but I think it's really great that sort of you led with some of those things, that there's some challenges in what you did, and then took those lessons, I think, and essentially created a business around it to teach other people. You talk about, or you say, you're helping business financial decisions. So is that your target specifically? Is people that are business owners? Is it general financial education? What's your, is it really niched down, or how do you kind of look at it from your perspective?
Yeah. So with Producers Wealth, if you're a business owner generating, I would even say $500,000 of gross income, you're probably overpaying in taxes. You're probably very reliant on third parties for financing and for just managing your business. So what we do, there's a concept called infinite banking. People have heard of it, a bank on yourself, privatized banking, and so forth. It's a strategy that's used in family offices for 170 years in the United States. We just share that and simplify that for business owners, of how they can actually position capital to align with their vision for their business and their family, and how they can essentially free themselves from being reliant on third parties for financing all their business operations. and just managing their business and financing investment deals. So we simplified for them and helped them create a strategy and set up these vehicles which you leverage for this specific strategy. So that's kind of where we fit in. And again, the one thing that we are brainwashed with, for lack of a better word, in the financial media is everything is so product focused, right? We're just being sold constantly products. Nobody talks about strategy and actually how this, how you would do certain things and how you would continue to do certain things and how you actually execute this strategy, which leverages vehicles and tools and tactics, right? So that's what we focus on. The vehicle, this particular product is one thing, but there's a whole strategy built around this. So we focus on, the golf swing, not just necessarily the golf clubs. And there's different clubs that you're going to have to use at different parts of the course. And to stick with that golfing analogy, because the Masters just finished up. But the biggest thing about success on a golf course is course management overall. Your golf swing is very, very important. You're going to use different clubs in different parts of the course, but managing the course, playing the right shots at different, in particular spots on the course, and then also managing the downside, errors. If you can reduce the amount of errors, and if there is an error, play a great recovery shot, you're still going to have a very low score and it puts yourself in a position to win the golf tournament, right? So we do the same thing when it comes to our particular wealth strategy. This infinite banking strategy is there's a strategy, there's a course we have to play. There's different things that we do in different parts of the course. We got to limit the downside and protect the downside. And if there is an error, you want to recover pretty quickly with a great recovery shot to put you right back on track of where you want to be. So that's what we work with, and we work with business owners. We understand them because this is the exact same strategy I've personally done for 15 years of my life, a little bit more now. So we practice what we preach. We eat our own cooking without getting sick, as I always say. And that's why we can be valuable, because we actually use the strategy that we teach, which is very, very rare in the financial space too. You usually have a bunch of salespeople running around selling stuff that they don't own or not know a lot about, right?
Yeah, true.
So I try to purposely build a business which is completely different than the industry norm of companies that you find in that space.
Yeah. So will you I guess elaborate on infinite banking? And we've had people on the podcast before that have talked a bit about it. It's actually probably been a while. Just for people listening, and I mean, honestly, for me, I feel like it's a concept that has always been a little bit elusive, I guess, for me to understand. Will you elaborate a little bit so people understand what you're referring to?
Absolutely. Let me start by the problem it's trying to solve, right? Because that's the big thing is everybody's like, what is it? But it's like, what does it actually like solve?
Yeah.
So the big, if you're a business owner and you're listening right now, the mainstream financial advice that you're getting as a business owner is, I would say 99% of it is flawed, incorrect, or you should probably be doing the opposite of what you're being told. So what do I mean by that? When you started your business, most of us, unless we're born with a silver spoon in our mouth or we have a rich uncle or rich parents, we went all in because we had to be. We didn't have a choice, especially if you're bootstrapping your business, right? And you didn't have private investors. So you went all in. All your resources, your assets, your money, everything went into this vision that you had. At that stage, financially, if you look at a financial statement, you probably look like a really broke person because you're all in. There's no other way to look at that stage, right? But and again, and then you pour your heart and soul into this. It's the long days, blood, sweat, tears, all those different things. And eventually, something happens. You're not going completely bankrupt, and there's life in this business. It's surviving, And you're like, okay, that's step one is not to go completely broke in 6 months. And if I can survive longer, this is great. You keep plugging away, put your head down. And at this stage, by the way, no financial advisor, tax strategist, CPA, or any legal advisors will even look at you because you're not their ideal client at that stage.
Right.
But you keep your head down and you keep grinding, and eventually the business becomes profitable, and eventually the business really becomes really profitable. And now you've flown, right? You've got wings. At that stage, you do get advisors that come in and they're banging on your door right at this particular phase. And then they come in and they say, look, Mr. or Mrs. Business Owner, you've done a fantastic job. You've grown your business. This thing is really working. You should diversify out of your business, put some money aside. And what happens at that stage is a financial advisor would say, you should diversify in stocks, bonds, and mutual funds. A little bit outside of your business. So what is that advice really? It's like, lose control of your money, give it to a financial advisor. What do they do with it? They invested in other people's businesses, in the markets. Yep. Like Apple. We're recording. I love Apple. I love my iPhone. I love my Apple devices. Buy some Apple stock with it, let's just say. You're giving Tim Cook and Apple money to grow their business. It's basically what you're doing. And at the same time, you lose control over your money, and your money is starving. Your business is starving for capital at that point. So that is what people don't realize when this happens. So all of a sudden, you were all in. You kept reinvesting in the business, and the business kept growing. And now you're quote unquote diversifying. And of course, there's a time and a place for this on the journey to do it a certain way, which is still in alignment of your vision of what you're trying to do. But at this stage, money's going out of your business into someone else's business. And what happens now? Well, the first problem that you have is cash flow management. I talk about the 4 seasons of cash flow. The 4 seasons of cash flow is the following. In summer, that's usually your highest revenue months. And every business owner knows, if I put you on the spot, you probably can say, May's my highest revenue month by far. No, that's it. That's my highest revenue month. So that's your summer. On the flip side, your winter is your lowest revenue month. Every business has them. Every business. So in the summer months and the height of summer, pretty easy to run a business. Pay for overheads such as, let's just say office space or a building, paying employees, with running payroll and all the other overheads that you have. Pretty easy to run a business then. But what happens is things start to slow down into summer. The fall comes. You start to slow down your business. And then all of a sudden, the fall then goes into the winter. And now you're like, there's really not a lot of money coming into the business. And then in the midst of winter, you need money to inject into the business. Why? To maybe roll out a new marketing campaign, prepare for the summer, lead gen, strategic partnerships, all that kind of stuff. You need some injection of capital to take you to the spring, and the spring takes you back into the summer. So all 4 of those months, you need access to money. So because you've diversified and have given Apple some liquidity to grow their business, now you have to go to a bank. And every business owner listening to this knows that going to a bank for a line of credit or loans, number one, it's going to be a proctology exam that you're going to have to go through. But you're just always not in a position of strength, and you always go begging, and you never really get what you want at the rates that you want. So that's the first challenge. The second challenge that you run into is for the growth of the business to continue, you need capital to hire more employees. Maybe you buy a competitor. You always need money to grow the business, a marketing campaign that you need to launch. So where does that money come from? Well, you're back to the bank again. So the challenges that infinite banking then solves, to answer your question, what is infinite banking? Infinite banking is, number one, positioning money where you can access it at all time to manage cash flow and grow your business. And the strategy involves life insurance. And when you say that, it's almost like a 4-letter word. But family offices the family offices, private wealth management firms of the ultra affluent in the United States. These are the Rockefeller families. I mean, family offices is, usually families with $100 million and up in net worth that they utilize this vehicle. They use a very specifically designed life insurance policy, and they have many of them, as many as life insurance carriers would sell them. But it's very specifically designed, not just for the death benefit, but for the cash value in the policy. Because you fund the premiums. Let's just say you put $100,000 into a policy, and let's just say you have 80,000 available within 30 days in this policy. So 80% of your premiums you usually have available right away. But you fund these life insurance policies, and it's usually a dividend-paying whole life insurance policy with a mutual life insurance carriers, what's used for infinite banking. Now, these are all terrible words that the financial media tells you, right? People would fall off their chairs. But again, there's one way of how insurance is sold to the general public, and one way of how the ultra affluent buy life insurance. Now, the ultra affluent buys it for max cash value, death benefit. Why? The money is guaranteed in the policy. Guaranteed. You'll never lose a cent in there. It's guaranteed to grow. Tax free. You get dividends through profit sharing with companies that have been around for 170 years, paying these dividends every single year consecutively for those 170 years. You also have a death benefit, but the best part of it, and this is where infinite banking comes in, is the cash value of these policies you place as collateral for a line of credit, whether through a bank or whether just directly from the insurance carrier. You can get a policy loan. So if you have, let's just say, $500,000 in a life insurance policy, you take a loan for $100,000 at 5%, let's just say, and you're earning 6% dividends in there, all tax-free. You can then, that $500,000 that you have in the policy is still $500,000 because you never touch the money. So you have uninterrupted compounding inside of this policy, and yet you get to use the same pool of money to manage your business, manage cash flow, and grow your company at the same time. And it has a death benefit too for succession planning in your business, in your family, and so forth. And the money is where you can access it to grow your businesses. So this is basically the fundamentals of infinite banking, is where you warehouse cash to best serve you, your business, and your family, and build your dream instead of just investing in someone else's. As a business owner, we get this, right? We're like, I'm investing in my dream. This is my business. It's my dream and my vision for my family. But yet your money is not in alignment with your dream and your family's dream. So the infinite banking for business owners kind of brings this together in alignment.
No, thanks for the explanation. I think it's an important strategy for people to understand, and I think it does get a little bit complicated.
Yep.
But ultimately, at its base level, like, it is a very smart strategy for the things that you just mentioned, and you need capital infusion into your business and whatnot. Correct me if I'm wrong, the contributions to these policies are post-tax, right? It doesn't save you tax like initially. It's more about like the growth and the ability to access capital without paying taxes on it, things like that. So it's kind of an after earnings type of investment, which a lot of investments are. It's pretty hard to find anything substantial where you can invest pre-tax money. You get a little bit in an HSA, a little bit in maybe a 401k or something like that. But a lot of our, once you get beyond those initial pieces, it's hard to, I guess, extract that from a tax perspective.
Correct. Yeah, 100% correct. Okay. And there's a lot of things that you can do to reduce your taxes legally as a business owner.
Right.
That's why I kind of chuckle sometimes, because I've got a global lens being from a foreign country. I kind of chuckle sometimes at business owners in the United States, because I'm like, owning a business here is one of the best tax plays globally. I
Yeah.
mean, it's a country that has a tax code that favors people that actually, are producing and creating value for others. You get rewarded here as opposed to a lot of other countries where you don't. So there's a lot of things that you can do as a business owner to reduce your taxes legally.
Hmm.
And then the next piece then is, well, where do you position your money where you get also tax benefits? If you think about it from a business standpoint, that is the best way of earning and generating income from
Yeah.
a tax perspective in the United States. Then the second piece is, well, where do you put it where it's going to get the most favorable tax treatment? And that's life insurance. And then where do you deploy it? Back into your business or in other vehicles such as real estate. If you do those three things, you're playing the tax game very, very, very well. And if you just take a step back and look at this, these are all incentives, by the way, that the government has for society. Businesses solve problems. So you get rewarded as a business owner for solving more and more and more problems. So that there's an incentive there to go out in the marketplace and solve problems through your products or services. And then the second piece is life insurance. If you think about life insurance in general, it really is a safety net for society, because with that in place, family have access to liquidity when terrible events happen. So
Hmm.
instead of the government having to take care of families or many, many different people and come in and rescue folks, well, there's life insurance companies that can do that. So there's an incentive there for people to position capital in life insurance. And then the third piece of that, where do you deploy it? Well, again, housing and affordable housing is another big major problem that the governments have. So they're looking for entrepreneurs to solve that problem, and therefore they get very, very favorable tax incentives. And the
Yeah.
same thing with businesses. So, if you just look at it like that, and by the way, I learned this. I met someone through my network. This was around 2004, 2005, and they had their own family office structure. It was a legacy family. It was like a third generation in the family, and they generated income through their business. They positioned money in life insurance, and then they bought real estate. So that was the first time that I learned it. At first, it blew my mind because they also were shareholders in a private bank themselves. And I said to him, I'm like, okay, so you make your money in business, you put it in life insurance, and you buy real estate. But you guys have a bank. Why don't you just put the money in the bank? And he said, no, that's where other people put their money. They put their money in our bank, and then we play that banking game there with them. We play our own banking game with more control over our money and our capital in life insurance. And it just blew my mind. And the same thing, I took action in the book after reading the book Robert Kiyosaki with real estate. I took action, after that advice from my friend, and I was like, well, I got to figure this out. I want to become my own bank too. How do I do that? Now, fast forward years later, back to today, if you set up a trust and a family bank with all of your family policies, you become the lender to the family's businesses and the family's investment opportunities. So my own business, Producers Wealth, we don't have to go to banks. If we need capital, we just go to our family bank. And just like I would borrow money from a bank, I borrow it from the family bank in our trust. There's a note. I mean, I pay an interest. The company pays an interest to the trust, which is, of course, tax deductible, just like any other loan would be for a business. But it all stays in our pool, our family's capital pool, instead of funding outside third parties, banks and other institutions.
Yeah. You're effectively paying interest to yourself. So it's a yeah, it's a really great strategy. I think the, the you kind of painted this picture when you started, where it's like, oh, when you start in a business, you're broke and you're you're doing everything, and you're so it's tell me if you disagree, but I think it's not maybe like a first line um, investment vehicle. It's once you've established some things, got your business going, maybe you've got some, or maybe you have a high paying job and you want to start putting some of that money in a place that you can create this structure. But it's very much you talked about the seasons, and it is, I guess you could use those same analogies towards seasons of life, in that, there's parts of your life where uh, making money is easy. There might maybe other parts where it's not. And I think just using the different strategies that are available to you and understanding them, put a little time into kind of learning what that looks like for you. I think all of that is just so valuable. And so, what you're doing with Producers Wealth is are you are you coaching people, or is it just meant to set them up with infinite banking, or a combination of both? Like, what's the structure there for folks that might be interested?
Yeah, so we actually set up the policies the correct way. So it's a life insurance brokerage, and then the second part of it is once we create a strategy for you and set up these vehicles. Well, now we're there as mentors and coaches to help you implement and execute this system. Because again, people say, well, how does this go wrong? How does this not work? Well, the first thing is it's not set up correctly. You get the policies that Dave Ramsey talks about, which, by the way, I agree with Dave 99% of what he says. And people are like that. That's, well, how do you agree with him if he's saying all these terrible things? I said, because that's how retail life insurance is sold, the exact same way that he says, right?
Yeah.
It's not structured correctly. It's structured so that the agents get massive commissions. It's a terrible place to park capital. So I agree with them. That's how it's at retail level to the general public. We're talking about a very, very specific way that it's set up and structured. So yeah, so we make sure that it's set up correctly, just like it is in family offices, with the right carriers, correctly for the person. And then the next step becomes, well, how do you use it? So we help them create cash flow management systems. We help them create systems, and then we track and monitor it. You can have a perfectly designed policy, and I've seen this, and people come to us and say, I think it was set up wrong. And I said, well, let me take a look at it. It was set up correctly. It was just not managed correctly, and they didn't follow a system. So we help and assist with that too. And just to your point, you're spot on about doing different things during different parts of the journey. Like when you're just starting up a business, like when you were saying you're all in, that's not the time to set this up. That's why I mentioned if you're making $500,000 of gross revenue, that you should definitely be looking at this million. It's making $1 million of gross revenue as a business owner. It's a no-brainer. And if you're a high income earner, you should definitely be taking a look at it too, because at least you could start this banking business. One of my mentors used to say, MC, you should always be in two businesses. Always. You should be in the business that you're in. It's either a business owner or as an investor, and you should be in the banking business. And this puts you in the banking business. So yeah, there's a time and a place. I wouldn't start if you're just starting out. You need to hit certain thresholds. And just to stay on that, because some of your listeners might be wondering, well, you said in the beginning, there's a time and a place of how to diversify, which is still in alignment of your capital. So I didn't want to leave everybody hanging on that one. So what is a correct way to diversify? So I'll share a couple of examples with you. We have a client that set up this entire system, okay, this banking system. And by the way, the first way to diversify outside of your business is this banking system. Because most business owners, especially successful ones, if you look at their net worth, let's just say they have a $10 million net worth. This is for simple math. You're usually going to have like almost 9 million in their business and $1 million outside of it, maybe, a house or a second house and maybe a couple of cars and stuff. But everything else is in the business. So the first way of diversifying is outside of your business into this banking system. And it's not taking any money away from the business or starving it. You're just moving it into a different pot where everything isn't just stuck in the business, right? Because you get an economic downturn, you get another pandemic, you could take a hit and your net worth takes a hit then. So it is smart and prudent to diversify. So that's the first one. The second thing is how to diversify is other areas that serve you and your business. So there's one client that set up these policies, set up this banking system of ours. He wanted to buy the building from which his business was operating. So he used his own system to buy the building, which had 3 other tenants in, plus his own business. So there's 4 tenants in there. So that's another way of diversifying. So now he's got the business. He owns the real estate from he's one, his business is one of the tenants, and he's collecting rent from the other 3 tenants that's in there. That's another way of doing it. Private lending to other business ventures that you have, or investors or other business owners in your community. We all talk about, hey, we got to support our community or local businesses and so forth. Well, you can, as a private lender, again, your banking business, support other local businesses. So instead of them to be beholden to third-party financial institutions or other banks, you could step in and structure lending with them. So there's different ways. I mean, I could go on with different ideas, but what I wanted to share is just the concept that we have been told as business owners of diversification. It's completely different of what you should be doing. And again, another example, buying a business which is in the same industry or alignment with your own business. It's another way of diversifying, right? Mm-hmm. So there's a lot of different ways you could do that, which keeps your capital aligned with your vision and your mission, and of what you want to do and your family want to do.
Yeah. I think I really like that, kind of the way that you wrap that up there is just like keeping things aligned with your vision. I think, and we said this before we started recording, but I think that, it's not just business owners that get bad financial advice in a lot of instances. It's sort of everybody. And I think it's, you do have to put some time and effort into educating yourself, connecting with the right people that know, if you're just, whether you're a business owner or an employee, if you're just handing your money off to, your financial advisor, and all they're doing is like you mentioned, putting it into stocks and mutual funds, you can do that yourself. You don't actually need to pay someone to do that. They're not going to do any better job than you do. Like it's just probably not a good use of the money. It's not that it's bad to have those vehicles as part of your diversification, but it's just, I think, some understanding where you really need someone to help you, and probably this more complicated concepts with infinite banking. I think having people help in that scenario and having advisors makes a lot more sense. So I definitely think there's my, I guess, push here is for people to just spend a little bit of time to educate themselves, and also, business owner or not business owner, I think, finding the right advisors is extremely important to kind of that financial wellness piece. So
yeah,
appreciate the explanation. I do want to switch gears a little bit, MC. Let me just make sure I ask you the questions, that I ask every guest. The big one, of course, is related to the name of the show being Know Your Why. So I always ask everybody, what is your why? What's the driver? You've had a lot of success, have a very interesting story, background and everything. And I think I'm always intrigued by what people, are motivated by at this stage.
Yeah, I think, and that's what I love about your show is if you think about why people do certain things, right? It's either to get away from pain, or it's to pursue like a higher kind of mission, which is more in purpose of things. So it started for me with pain. I didn't grow up, in an ultra affluent family. I just grew up a regular family in South Africa. And I saw my parents go through a lot of pain financially too. There was a version of, not a Madoff, but I mean, there were Ponzi schemes at one stage everywhere, right? And around, I would say 2005, 6, 7, 8, 9, there was just the one Ponzi after another. I jokingly say it was the period where, people were probably, the topic of conversations like whose Ponzi's the biggest. But that happened all over the world. So I saw a lot of pain. So the first thing that motivated me, the why, was just pain. that I saw firsthand, and I never ever wanted to end up in a position of pain or in a terrible financial situation. So the first thing I would say that drove me was fear and pain, and then eventually when I had some success, and I guess everything is relative, and started to continue to have success after a lot of failures. Is just and then I met my wife, started a family, and so forth. Has been my family, and that's my main driver, my why. That's why I do what I do right now, and actually that's why I do everything: business, coaching my kids' sports. So yeah, everything that I do is for them. So that's my biggest driver. But I just wanted to also share that it didn't start right there. I think a lot of people can relate to where they start in a place of fear and pain, and first being like, okay, I don't want to end up homeless on the street, right? And that's the main driver. But eventually, as you climb the ladder of success, and everybody's got their own version of that, the why changes, and you live more in purpose, and your purpose changes.
Yeah, I think that's a very common, I guess, not the path. What am I trying to get at? A lot of my guests have talked about, kind of having different whys at different stages. It goes back to the seasons, analogy, in that, sometimes we're trying to escape something, sometimes we're trying to get, run towards something, and sometimes we're trying to lift something up or someone up, and it certainly might change over your life. And I think, a lot of times in the beginning, it's like, I don't want to be that way. I saw something I didn't like. I don't want that. And,
Yep.
And over time, the further you might get from that, that you find a new way to stay motivated. So I think that's great. When people hear this and they want to connect with you, what's the best way for them to reach out?
Yeah, so they can go to producerswealth.com. And I also have a book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably, where I shared this Get Wealthy for Sure strategy, which, the title, I came up with that title because we live in a world where everything is so instant right now, and everybody wants everything right now, and as far as like when it comes to building wealth, we're getting like acclimated to to putting some money in a doggy coin and become a multimillionaire overnight, right? And I kind of like I'm taking the opposite side of this and saying, look, building wealth is a long-term strategy. It requires discipline, focus, resilience. And there's a way to get wealthy for sure, because I just haven't figured out the get rich quick in my life. If you have, good for you. Please let me know how you did it.
Yep.
But I believe in the get wealthy for sure rather than the get rich quick. So the book is right now we're doing an offer where we're giving away a free paperback copy. People just pay for shipping and handling. And if they want a free paperback copy of the book, Get Wealthy for Sure, they could go to getwealthyforsure.com. That's getwealthyforsure.com.
Awesome. We'll put that in the show notes so people can find it easily. You said the get rich quick thing. We should almost change it to get rich lucky, because I don't think that there is no get rich quick unless like you just happen to, I don't know, strike gold somehow, like whether that's with like you said, some sort of cryptocurrency or something. But even it's just that stuff can happen. You can win the lottery, like that stuff can happen, but none of that is as guaranteed as the strategies that you're talking about. So yeah, it's a great point that it's there is a way to get rich for sure. It's not going to happen overnight. It's going to take time, likely a decade or so, but it's there. The opportunity is there if you're willing to put in the work and take the time. So this has been great. I really love having you on the show. I appreciate everything that you shared with us, and I think really valuable strategies for people to check out and connect with you. So thank you for being on the show today. Thanks for taking the time out. I truly appreciate it.
Thank you so much for having me, Jason. It's been a blast.
Absolutely. And folks listening, make sure you connect. We'll have everything in the show notes so you can connect with MC. And please like, rate, and review the show so we can continue to get great guests. As always, thank you for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?